All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. Calling in from San Diego, California. There's the water right over there.
It is absolutely gorgeous. I am there with you in spirit. I was watching you do your presentation on Zoom through the virtual, man. Absolutely awesome. Let's get right into the show, though. This is for Friday, October the 13th, 2023. Let's get right into it, man. Wild. There's a second war now in the Middle East. Your thoughts and your perspective about the war in the Middle East. What's your take on all of this?
Well, I think there's a couple of things that I just want to get out in the open. I do not proclaim to be an expert in Middle East. I don't have any history, no direct experience. I will not be chasing every headline for clicks and all of that. My opinion on it is if it stays self-contained between Israel and Hamas, it's going to be horrific and horrible and all of those things. But as someone in North America, specifically in the United States, that's where I'm good. I'm not going to have it change my day to day. If third parties get involved, then we may be on the cusp of World War III, and we need to start paying attention. What we have now is something that most directly impacted oil prices. You saw oil shoot up the first day of trading, and you saw people running to the treasuries, the riskless asset. That's where it kind of is for me. I hope and pray for peace every day, as I do for Ukraine and Russia and all of this area. But I can't allow myself to be over rotated and change my day to day. I can't do anything. As us. So as long as it's self-contained and other parties aren't involved in World War III isn't on the cusp, I think that's kind of where it's at for me. And I'm no expert about Russia and Ukraine or the Middle East, so I would be a fool to pretend like I know better than anybody else.
100%. And I want to say wholeheartedly, I agree with you. And I also want to just say to the viewer to really put this in perspective. I know Michael's heart as well as my own heart. It's not, we want peace. We don't want to see people hurt. It has nothing to do with that. That's not what really, I want to put kind of a cap on this, and that what we're saying is that a lot of media and a lot of social media, people are running to this because it's a big headline. And what Michael, I believe what you're really saying is that you're going to stay true to the one rental at a time message. And we're going to talk about real estate. We're going to talk about interest rates. We're going to talk about inflation, the economy, and we're not going to get into a bunch of talk about Israel and our opinion about Palestine and the war in the Middle East, because one is you're not an expert. I'm not an expert. And also two, it would be a disservice to the channel. Follow up on that?
No, I think that's exactly right. I've only looked at my buy box for 20 years in a row. I know what I know. I know the economy. I know what's going on there, as in Ukraine and Russia is horrible. It is. I mean, it does hurt, but we have a job to do here on this channel, and I'm not going to chase clicks. If I wanted to chase clicks, I'd talk about crash all day. I'm gonna just try to get a little bit better every day, and that's where the focus is.
There you go. Let's stay focused. Let's keep our foot on the gas. So let's continue. Let's talk about inflation. Two things that came out this week: PPI and CPI. What did you see there? What happened in your take on the PPI CPI?
Yeah, so PPI came out a little hotter than expected. PPI is really a leading indicator. But when you broke down PPI, it was really gasoline. Gasoline was an over rotation and had a huge impact on PPI. We've obviously seen gasoline roll over the last couple of weeks. It obviously could come back given what's going on here recently, but still is down noticeably from where it was a couple of weeks ago. So I would expect PPI to come off the boil, knock on wood, things don't get worse. And, peace is around the corner and all of that. So PPI was hotter than expected, but pretty explainable. And, gasoline has come down since the report.
Interesting. Okay. We're obviously always keeping an eye on it. It feels as though, again, like you said, coming off the boil, meaning that, again, that the inflation, all the things that the Fed has done, that in fact it is working and we're moving in the right direction. Would you agree with that?
Yeah, it feels like it. I mean, obviously, we could get surprised. I mean, the 1970s saw an oil embargo that caused huge problems, and that could happen again. I'm not saying it's impossible, but those are the things we need to watch for. But as of right now, it still feels going the right way. And talk about CPI. CPI came in as expected. Headline was a 10th higher on the year-on-year number, but even that is coming off the boil. I think it was last month, shelter was 90% of inflation. This month, it's 65%. Core went from 4.3 to 4.1. And again, core is most important to the Fed. So it's still trending. I think there's a chance that core is sub 4% next month, which will be meaningful. But, again, here's the deal. Inflation, like we talked about a year ago, inflation has three parts. There's the goods section, which is easy, and that's already over. There's shelter, which is going to happen, is happening, but doesn't happen quickly. And then there's services, aka wages. That's going to be sticky. That's going to be with us until the summer of next year at least. So this is not like a light switch. There's some heavy lifting ahead.
Interesting. Well, of course, we're always talking about it. You always keep your eye on it. It's interesting. We're going to continue to watch it. Let's talk about the Fed minutes. What happened with the Fed minutes? Why is that significant this week?
Well, the Fed minutes were for September 19th and 20th meeting. They come out about 45 days after the meeting. And really with the Fed minutes, we're trying to validate what they told us 45 days ago. To net it out, there was disagreement on whether we would have one hike or none the rest of the year. But where there was complete agreement, 100% agreement, is they're not talking cuts until inflation is 2%. That's meaningful. There's been plenty of people to kind of pontificate and suggest the Fed could tinker with rates and do a quarter point adjustment if we're on the track to 2%. I think what the Fed told us in the latest Fed minutes is no. We're going to be higher for longer, and the job's not done until the job is done.
Got it. Higher for longer. That seems to be something you've been talking about for, I feel like, the last 6 months. It's been a consistent theme of everything you do, daily financial news, and what we do here on Fridays. Let's talk about the Fed pivot. What's your thoughts on a Fed pivot? What happened this week that maybe your thoughts on that pivot? What happened?
So there's a lot of people that put the idea of a Fed pivot as they're cutting rates. That's not what I'm calling a pivot. I think something meaningful happened on Sunday and has transpired on Monday, Tuesday, and Wednesday of this week. You have had more and more Fed presidents, including the vice chair, basically say, I think we're done. I don't think we need to do any more. We don't know what the lag effects are going to be. Things are going to break. We can be patient. We could wait. If you flash back 45 days ago, the odds of one more rate hike this year, either in November or December, was 60%. After what's transpired Sunday, Monday, Tuesday, and Wednesday, now the odds of no rate hikes the rest of the year are 60%. So I believe there has been a Fed pivot. I believe the Fed went from thinking they need to do one more or maybe two more to being done. So I think they did pivot. They went from more to stopping or pausing. As you know, I've been calling a pause for months now.
Yep.
I now think the Fed agrees they're going to pause.
Spot on. Spot on. You've been very consistent and, again, very spot on. I want to connect the dots to something you talked about. So with the war in the Middle East, what's going on in Palestine, Israel, that portion of the war. You mentioned that money, big money, moved to the bond market. Thus, that's why interest rates looked like we were going to go 8% plus last week. All of a sudden, we have this attack over the weekend, and then rates pulled back 7.6, 7.7, depending on what you're looking at on average. Explain the 10-year in relationship to the 30-year mortgage and what happened this week.
Yeah, two things happened. Obviously, war breaking out means people run to treasuries. That is true. You're absolutely right. I believe a more meaningful impact was the Fed pivot. When the Fed vice chair came out and said, I think we're done. Now, they never say it that clearly. You have to read his language and understand how to parse Fed speak. But that's basically what he said. And then it was and again, some of the people that were talking Monday and Tuesday, Ty, they're hawks.
The hawk. About 30 days ago, there were some Fed presidents that said, we don't only need one, but we need two more rate hikes. Now they're coming out basically admitting that they think they're done. Now, could that be because of what happened in Israel and what's going on in Palestine? I don't know. But it doesn't matter. I think the fact that the Fed is saying they're done is a pivot. And once we had that, I've told you all along, once the banks feel like the Fed is done and there's not another surprise rate hike, you're going to see rates come in. And that's what I think is happening.
Spot on. You've been talking about it. Hey, when we were headed for 8, all of a sudden 7.75, 7.6, 7.5, 7 and a quarter looks really awesome compared to 8 plus what we thought last week. So I'm with you on it. I love it. The Fed pivot. Let's finish strong. So let's talk about it. I'm attending virtually. You spoke. You're there in San Diego at Bill Allen's 7-figure flip hacking live. We had one of our all-time heroes speak at the event, Mr. Bruce Norris. Let's finish strong. What is the opportunity? What were some of your takeaways from Bruce Norris and just your general thoughts as we finish?
So Bruce Norris, if people don't know, was the gentleman that saved Olivia and I. He basically introduced the concept of the affordability index, which allowed Olivia and I to sell or 1031 and move into multifamily. So when he speaks, I listen. He wrote The California Crash, The California Comeback, and he always talked about affordability. So I wanted to come to this meeting because he was speaking and hear what he had to say, because he talks about affordability. And right now, affordability is horrible. So historically speaking, if there is horrible affordability, there is a price crash coming. And what Bruce basically did in this report that he just released, and he's like, sorry, guys, it's going to be different. It's uncharted territory. And in fact, his title of his report is Uncharted Territory. And basically what he said is, in a nutshell, we got a decade of appreciation in 2 years. We're going to be sideways for 5 to 8 years. No more appreciation. The market's not going to bail you out. The mortgage is the asset. And there's no crash coming. And, that made me feel better. I had no idea what he was going to say. And to hear him talk about very similar to what you and I have been talking about was fun to see.
Spot on, man. I got to say that 100% what you've been talking about, and about the fact that we're probably going to go sideways for several years. He reconfirmed that. And again, something that you and I kind of dabble with and talk about is creative financing, seller financing, subject to. That's probably the biggest opportunity going forward, because the fact that if you can negotiate or take over an existing loan or get a very low cost of funds, something with a 3 or a 4 or a 2 on it, that's going to be a tremendous opportunity. Any finishing thoughts on that?
No, it was just fun to hear Bruce Norris talk. He told a lot of stories. You got to remember, Bruce Norris started this in the 70s. So he told plenty of stories about the 80s that could easily be done today. So yes, there may be folks talking about creative finance, innovation, and sub-2 and all this other stuff like it's new. It's not new. It's been around for a long time. And it's always good to hear Bruce Norris speak. I appreciate him probably more than he knows.
We love Bruce Norris. He's a hero of ours. Folks, Michael, thank you for all that you do. Folks, if you like this show, follow, subscribe. If you're watching this on Facebook or another channel, go to YouTube right now and follow this man. This guy, Michael Zuber, he puts in the work. You can find him at One Rental at a Time. If you're interested in some of the courses, mini courses, boot camp, you can also go to onerentalatatime.com. Michael, have a great weekend. Thank you for all that you do.
Thank you, buddy.